Caesars Entertainment Corporation is an American gaming corporation based in Paradise, Nevada that owns and operates over 50 casinos and hotels, and 7 golf courses under several brands. It is the fourth largest gaming company in the world, with annual revenues of $8.6 billion. Caesars is a public company, majority owned by a group of private equity firms led by Apollo Global Management and TPG Capital. Caesars' largest operating unit filed for Chapter 11 bankruptcy protection in January 2015. History: William F. Harrah era. The company's background can be traced to October 29, 1937, when Bill Harrah opened a small bingo parlor in Reno, Nevada, a predecessor to Harrah's Reno. In 1955, he expanded to Stateline, Nevada, on the south shore of Lake Tahoe, where he would eventually open Harrah's Lake Tahoe. Harrah's Inc. made its initial public offering in 1971. Following that, in 1972, it was listed on the American Stock Exchange. In 1973, Harrah's became the first casino company listed on the New York Stock Exchange. Bill Harrah died on June 30, 1978 of complications from aortic aneurysm and cardiac surgery at the Mayo Clinic in Rochester, Minnesota. Under Holiday Inn in February 1980, Holiday Inns acquired Harrah's Inc. for $300 million. Liquidation of Harrah's collection of almost 7,000 antique automobiles reportedly returned the full purchase price of the company to Holiday Inn. Holiday Inn at the time had interests in 2 casinos: the under-construction Holiday Inn Marina Casino in Atlantic City, and a 40% stake in the Holiday Casino, adjacent to the Holiday Inn Hotel on the Las Vegas Strip. In July 1987, Bill's Casino Lake Tahoe opened. Harrah's Laughlin opened in August 1988. The Promise Companies, the company now known as Caesars Entertainment, was formed in 1990 as the Promise Companies, to effect the sale of the Holiday Inn Hotel business to Base plc. Promise was created as a corporate spin-off, holding Harrah's, Embassy Suites, Homewood Suites, and Hampton Inn. Base then acquired Holiday Corp., which retained only the Holiday Inn assets. The next year, the company's headquarters moved from Reno to Memphis, Tennessee. In April 1992, the Holiday Casino was rebranded as Harrah's Las Vegas. The late 1980s and early 1990s saw a rapid increase in gambling markets with the growth of Indian gaming and legalization of riverboat casinos. In 1993 and 1994, the company opened Harrah's Joliet, Harrah's Vicksburg, Harrah's Tunica, Harrah's Black Hawk, Harrah's Central City, Harrah's Shreveport, Harrah's North Kansas City, and Harrah's Action. Renamed as Harrah's Entertainment, Inc. In 1995, Promise decided to spin off its non-gaming hotel businesses, in part because they had been undervalued by investors due to perception of the company as a risky gaming stock. Promise Hotel Corp. was established, holding Embassy Suites, Hampton Inn, and Homewood Suites, while the parent company, holding 16 casinos, was renamed as Harrah's Entertainment. Harrah's continued its expansion over the next 10 years, opening Harrah's Skagit Valley, Harrah's Sky City, Harrah's Street, Louis Riverport, Harrah's Cherokee, Harrah's Prairie Band, Harrah's New Orleans, and Harrah's Rincon, and acquiring the Southern Belle Casino, Showboat Inc., the Rio All-Suite Hotel and Casino, Players International, Harvey's Casino Resorts, Louisiana Downs, Horseshoe Gaming, and the World Series of Poker. In 1997, Harrah's launched its Total Gold loyalty program, developed at a cost of $20 million. It was the first gaming company to offer a system-wide comps program, allowing points earned at one casino to be redeemed for goods and services at any of the company's other casinos. The system would be credited as a major driver of Harrah's growth over the coming years. Harvard Business School professor Gary Loveman joined Harrah's as Chief Operating Officer in 1998, and would go on to serve as Chief Executive Officer from 2003 to 2015. In 1999, the company moved its headquarters from Memphis to Las Vegas. Purchase of Caesars Entertainment. Harrah's made its largest single expansion in 2005, when it acquired Caesars Entertainment, Inc., for $10.4 billion. Negotiations were spurred on by news of a merger agreement between MGM Mirage and Mandalay Resort Group. The two companies sold several properties ahead of the merger to assuage antitrust concerns, including Harrah's East Chicago and Harrah's Tunica. The acquisition increased Harrah's portfolio to 40 casinos, plus 4 cruise ship casinos. The deal furthered Harrah's goal of gaining a larger presence on the Las Vegas Strip, where Caesars owned 4 casinos, and improved its ability to market to high rollers. Harrah's began to push for a larger international presence in 2005, announcing joint venture agreements to build casinos in Spain, Slovenia, and the Bahamas, and applying for a license to build a major resort in Singapore, though none of these projects would come to fruition. Harrah's also acquired London Clubs International in 2006, and the Macau Orient Golf Club in 2007. From 2005 to 2010, the company consolidated control of a long stretch of the east side of the Las Vegas Strip, acquiring the Bourbon Street, Imperial Palace, Barbary Coast, and Planet Hollywood casinos, along with large tracts of land behind the Strip properties. In 2005 and 2006, Harrah's closed its Lake Charles casino due to damage from Hurricane Rita, sold the Flamingo Lachlan, and sold Grand Casino Gulfport. Company goes private. Loveman at some point sought advice from private equity tycoon David Bonderman about the possibility of spinning off ownership of Harrah's Real Estate as a separate real estate investment trust, hoping to attain the higher price-to-earnings ratios at which hotel companies traded, compared to gaming companies. In 2006, the discussions evolved toward the idea of a leveraged buyout of Harrah's by Bond Ehrman's company, TPG Capital. Another private equity firm, Apollo Global Management, approached Loveman about a buyout, and he encouraged them to collaborate with TPG. By the end of the year, an agreement was announced for the two companies to buy Harrah's for $17.1 billion in cash plus $10.7 billion in assumed debt. The transaction closed in January 2008, leaving Harrah's with $25.1 billion in debt. The link. It was widely announced in previous years that the company planned to implode properties and build new ones from scratch. But after the market downturn, the company conceded that it had little experience in building major resorts. Instead, it developed Project Link in 2009, which calls for retaining and improving all existing buildings while adding a collection of about 20 restaurants and bars to be built along a winding corridor between the company's Imperial Palace, O'Shea's and Flamingo casinos on the east side of the Strip. It is an attempt to create the kind of entertainment district that has developed organically in cities such as Los Angeles, Memphis and New Orleans, yet is lacking on the Strip with its enclosed casino-centric zones. If this new zone is successful, it will provide competition for the Fremont Street experience. New Las Vegas Arena. The Anschutz Entertainment Group first tried to build an arena in Las Vegas in association with Harrah's Entertainment. In 2007, the joint venture announced they would build a 20,000-seat stadium behind the Bally's and Paris casino hotels. Caesars Entertainment, Inc. had previously envisioned using the location to build a baseball park, but the company's buyout by Harrah's cancelled the plans. Through the following year, Harrah's got uncertain on continuing with the project, not knowing if AEG would split the costs, and whether building a major league-ready stadium without a guaranteed franchise to play on it would be feasible given the enduring financial crisis. The original plans were to break ground on June 2008 and finish the arena in 2010, but by 2009, it was revealed the stalled project had not even done a traffic study despite being located near a busy intersection. In 2010, the plans were changed to use an area behind the Imperial Palace. However, given the financing would require a special taxation district, opposition from Clark County regarding using public money in the project stalled it even further. AEG eventually backed out completely by 2012. Once MGM Resorts International came up with their own project using a terrain behind the New York and Monte Carlo resorts. This attracted AEG primarily for not relying on public funding. The acquisition of Planet Hollywood provided Harrah's with a contiguous 126-acre property bordering the Strip. The vacant lots behind the casinos had been slated for a sports arena large enough to hold a professional basketball or hockey team. The three casinos will have over 8,000 rooms which can be directly connected to the arena. It was announced in August 2010 that Harrah's would run casinos in Cincinnati, Ohio and Cleveland, Ohio when they open in 2012. Renamed to Caesars Entertainment Corp. In November 2010, plans for an IPO were cancelled, but a planned name change from Harrah's Entertainment Inc. to Caesars Entertainment Corp. did go forward as planned and was made official November 23, 2010. This change was intended to capitalize on the international name recognition enjoyed on the Caesars name brand. The Harrah's brand would remain one of the company's three primary casino brands. On February 8, 2012, an initial public offering took place, with the common stock trading on the Nasdaq under the symbol CZR. Caesars Acquisition Company merger. On December 22, 2014, Caesars announced its intention to acquire Caesars Acquisition Company. Under the terms of the transaction, shareholders of Caesars Acquisition Company will receive 0.664 share of Caesars Entertainment common stock for each share of Caesars Acquisition Company held. Casino unit files for Chapter 11 bankruptcy. The casino operating unit of Caesars Entertainment filed for Chapter 11 bankruptcy on January 15, 2015. On November 2, 2015, The Rock Gaming announced it would begin assuming management of Horseshoe Casino Cleveland, Horseshoe Casino Cincinnati, and Thistledown Racino from Caesars Entertainment, and complete the transition by June 2016. Playtika Company acquisition and sale. Caesars Entertainment Corporation acquired Playtika in May 2011 for an amount range evaluated between $80 and $90 million. Playtika, a social game developer company, was founded in 2010 by Robert Antokal and Uri Shahak and produced a wide range of Facebook social gaming platforms. As of June, a Chinese consortium, which includes Alibaba chief Jack Ma Xianfeng Capital, agreed to purchase it in a buyout for $4.4 billion. Properties.